I've been waiting for entries, and I finally got some. Similar to Nick, I took an entry on the euro. Now I was very cautious on this one because with a really strong market like this, when there's a lot of momentum, it's really sometimes every little dip gets bought into. And so ideally, I was waiting for a dip maybe down here. But when I saw that this consolidation area was, kind of forming, then I thought to myself, well, buying at the bottom of the range that we're in, which is this area right here, might be a good time to maybe start buying. Now, could it go lower from here? Sure. So I went pretty small in my position. But I thought, buying at the bottom of this range, not bad. Ideally, if we just take a fib, we're not really at the 38 percent retracement. So that's why I went a little bit light on this position. Same thing with the pound. I didn't enter the pound at all because ideally for the pound, I think we discussed this in the last. We all pretty much agreed that this level would have been a very, very nice level at this 38 or this 50% retracement level. So I'm also, keeping some cash to potentially, if this thing does go lower, I would prefer to buy at this level. It'll be a bigger trade for me. I'd put on more size to kind of, target maybe these highs over here.
Dollar index down today. Take a look at the dollar pulling back here. I actually went long euro dollar yesterday, so this is looking okay. Went long euro dollar cost averaging approach with the willingness to add if we do get a further decline in the euro. But I do have a long position currently on this one. People spending on credits and credit card stocks going up doesn't mean consumer is great. It means consumer. So first of all, I'm not saying the consumer is great. I'm just saying it's much better than what people would have you believe if you're reading doomsday articles. First. Second of all, credit card companies are intelligently priced. The market's really smart. So you might say, oh, well, people are spending on credit. They actually don't. If there is a true problem in the credit card world that the market has sniffed out, which the market's pretty dang smart, if the market has figured out that people are really pulling back on spending and seriously hurting, guess what? Credit card companies will go down because what will happen is delinquency rates will go up. Companies from these sectors, the very, very in the data companies, will also forecast less growth on their revenues, top and bottom line, right? So credit card companies have their finger on the pulse of the consumer. They know really well delinquency rates. They know really well how much people have, on credit relative to that. They know their credit scores. Are the average credit scores going up or down? They have so much data on the consumer. And so if credit card stocks are drastically lower or drastically higher, it absolutely is a really strong indicator because it's kind of like a conclusive multi-data point. I mean, they have the smartest people in the world working those types of companies. They have their finger on the pulse of the consumer, and they can tell if people are way overspending, if their delinquency rates are going up dramatically, if they have way more risk on their balance sheet. They know it all. They're super smart. So in fact, stocks that are in specific sectors, especially credit card companies, they play a really powerful role in insights on the consumer. So I would actually, Ball out, I see what you're saying, but I'd push back on you and just say that actually there's no one smarter on the consumer than credit card stocks. If you'd like to see more of our free daily chart of the days, make sure to join our Telegram channel if you have not already joined. And if you are already in the Telegram channel, make sure to hit that thumbs up button to support our work. Also, quick reminder that if you're looking for free tools and free education in the trading space, head over to a1trading.com. You can check out our free technical, fundamental courses and much more.